All
Record.
right. I hit the record button, guys, so we are officially starting. I am recording this. Again, these GoToWebinar recordings, they're good about 95% of the time. Sometimes they don't work. They crash. They don't sound right. You get just audio and no video, or no audio and all video. These things happen. So I would recommend, if you can, put the cell phones away. If you can, put them on silent. Close everything else out on the computer. Focus. Take notes. That type of a thing. So that you can get all this in. Hopefully the recording does work, and at the end of it all, we'll send it out to everyone. A couple things here. First of all, introductions. Of course, I'm Frank Gray with the National Real Estate Post. You're probably familiar with me, and you're probably by now familiar with Tom Hutchins as well. With Angel Oak, who's been on the show several times. And, of course, Angel Oak has been a sponsor with the show now for quite some time. We're really pleased to have him on.
Thanks for having me.
Yeah, no problem. So going forward today, guys, what we're going to do is we're going to go through a presentation that Tom's going to give. We are going to record this. As we go through this presentation, guys, Tom's going to be going over a lot of non-QM stuff, non-agency stuff, where you're probably going to think about, man, I probably got some deals right now that this might work on. We're going to tell you, go ahead and type whatever you want to type into the questions box on your computer screen. Okay, there should be a little icon there, and you can type in questions. Load it up. Type in anything. Questions you want to ask us at the end of the webinar, you can type in there. Also, any scenarios that you feel you would like Angel Oak to respond to. We probably won't be able to get to all of them at the end of the webinar, but don't worry. If you put it in there, it's recorded. Angel Oak has it. They will disseminate those questions to their appropriate account executive that's in your area, and they will get a hold of you and go through your scenario with you. So please load up your scenarios into the questions box as we go through. Another couple things before we start, and I hand it off to Tom, is just, guys, the stuff we're going to show you today is not only going to help you supplement and build into your existing pipeline, probably even today, right? You're going to be able to start to load deals in. Tom is going to go through and talk a little bit about how do you find these type of deals, because they're out there like crazy. So we're going to touch base on that. This topic and these products, guys, are outstanding conversation starters for you. One of the things that Angel Oak does for you guys is they will actually do real estate office presentations with you guys. Their account executives will, if you can schedule it with them, they'll show up with you at real estate agent offices and other referral partner situations where you can have meetings with people to help convey the information if you don't think you have it completely dialed in. So I really want you to look at this webinar as not only a way to supplement your pipeline right now, today, to get some new business in the door, but also to look at Angel Oak as a means of being different and unique out there and getting doors opened up to you to get more business in. So we're going to hand this off to you, Tom. I'm going to go ahead and hand over the ball to you.
Yep, great.
And you can take it away. I'm going to mute myself just to keep the noise level down. I may jump in from time to time to say something, right? We're going to keep you guys on a tight time frame. We're going to get through this really quick. We have to wrap this up about 5 or 10 till the top of the hour. And the screen we see now, Tom, is the one that shows the next slide coming up.
Oh, okay. So can you take it back from me?
Yeah, I can. Hold on.
Yeah.
Hold on. Okay. All right. So I have it back. Tell me when you want it back.
I'm ready.
Okay. All right. So let's see. All right.
How about that?
That's the one.
That's the one. All right.
That's the one. So take her away, Tommy.
Yeah, yep. Absolutely. Yep. So, really what we're going to talk about today is just how, we're asked all the time now, how do I use non-QM to help grow my business? Originators across the country, you read all the press, rates are going up, volume's going down. People are still trying to figure out, okay, 2018 is right around the corner. How am I going to grow my business? And so that's really why we're doing these. Just giving you some ideas. This isn't going to be a product presentation. It's just more of an idea starter, thought starter. maybe answer some questions about what non-QM looks like, because a lot of people already have kind of maybe a preconceived notion of what non-QM is. But we're actually going to just show you some loans that we close, because we think these loans represent the kind of loans, or excuse me, the kind of borrowers that are out there that are in your market. I've also been asked, what are the markets that non-QM products satisfy? And it's a really easy question. It's every market. Non-QM borrowers are everywhere. Everybody knows post-crisis, the pendulum swung and the credit box got really tight. And then nothing but agency and government loans have been available. So if you go in with that mindset, then you know that, okay, let's get the pendulum back to normal. And Angel Oak, we've been at this for over 4 years now. It's all we do. For those that don't know, we are a wholesale and correspondent lender. So if you're an originator, you can do business with us, and we will help you capture these loans and close these loans. We don't do agency loans. We don't do government loans. All we do is non-QM, and I think that's really, I'd like to stress that, because it does require some expertise, and our sales force, that Frank, you were just mentioning, that is happy to come out and work with you and make sales calls with you, but they're there to train you, and they're really good at it because it's all they do. It's all we do. So we don't get sidetracked when rates go down and there's lots of Fannie Mae business all of a sudden cranking in. It doesn't affect us. We keep focused on the non-QM loans, and really believe that helps us do our job and do it better. So with that, Frank, if I could, I wanted to just kind of start with everybody's, sound familiar. These are scenarios that I think we see on a regular basis. But this first one, this is kind of someone who's had a credit issue. They had a Chapter 7 in 2014. Then they had a foreclosure in 2015. A lot of loan officers, they see that on a credit report, or the borrower even tells them, and what do? They just say, I can't get a loan for you. You're not going to meet the Fannie Mae DU guidelines. So this was a borrower that came to us through one of our partners, and they came to us with this reasonable loan. And I think what's important is a lot of these are what we call storied loans. So we'd like to know, or it's important for you as the originator to know what the story was. If someone had a foreclosure, had a bankruptcy, why did that happen? Did they just decide to stop making their payments? In most cases, that's really not the case, because we're looking to make responsible non-QM loans. The story behind the credit actually does make a difference. And so this was a borrower. They had their own business. They were self-employed, and they had a health issue. The primary borrower was diagnosed with cancer, so they had to shut their business down. So the majority of their income was cut off during this time, during this treatment time, and the co-borrower was the sole provider. So you think about it, that's going to be that's a hardship. That's a medical hardship. But what has happened is the medical issue was taken care of. The borrower and the co-borrower, they've been renting for the last couple of years. The self-employed borrower went out and got a degree in a new line of business, and they started working. And so we're looking at the whole picture and what it looks like today. So this borrower came in after having a foreclosure just a couple of years ago. Again, it was after bankruptcy, so they kind of got the double whammy, the BK, then the foreclosure. But we looked at their situation, their credit. Since they've gotten their feet on their ground, their credit has gotten better. Very importantly, they were paying their rent on time for the last period, let's say 12 months. I don't remember if it was 12 or 24. And by the way, Frank, these are real loans. These aren't just make-believe. These are loans that we've actually closed, and I think that matters. That these are the stories of the non-QM borrowers that come to us through our partners, our originator partners. So this borrower came to us. We were able to get them in an 85% loan. You can see it was a $182,000 loan. But look, their credit scores, even though they'd had some credit issues, because they kind of got their feet back on the ground, their scores had recovered. So they had 680 and 690 credit scores, but their back-end debt ratio was 20%. So now that they got their feet back on the ground, it's not on here, but I'm pretty sure in this one, the borrower's previous mortgage was $400,000 or more, so they had a much larger mortgage. But now they've kind of right-sized. They found a house in a neighborhood that they want, and a payment they can obviously afford. And because the loan officer did business with Angel Oak and understood our programs, she was able to save this deal. Because 2 years ago or whenever, a few years back, if she didn't have a relationship with Angel Oak, she would just have to pass on this borrower and tell them they're going to have to keep renting. So
85 LTV is pretty good on that too.
Yeah, 85. We'll talk about some other ones. We actually do go up to 90. Another thing that's important to note: anything over 80%, no mortgage insurance. None of our loans carry mortgage insurance, so you're not having to talk about, well, you've got this MI and this payment doesn't really add a lot of value, but you still have to pay it since your LTV is over 80. That doesn't apply with the Angel Oak loans.
There is a question on this particular scenario. It's like, what was the program that they went into, if you remember? Was it
Oh, yeah. With a foreclosure, it was less than 24 months when we did the loan. It was earlier this year. It's our non-prime program. The good news, and I'm going to show you guys some tools, is you don't have to remember our programs. We give you tools that will put the borrower in the right program, plus our account executives are always going to put the borrower in the best program, the best product that we have for that scenario. But this one was certainly a non-prime. Okay? All right, so here's another one. We had a borrower, really good credit history. However, they had an investment property that they had a mortgage on, but it happened to be a lot. It wasn't even a house. But they foreclosed on it in 2014. Then they wanted to get a jumbo mortgage recently. Well, everybody knows if you want a jumbo loan, a jumbo prime mortgage, you have to have spotless credit for 5 and many times 7 years. So this borrower had a foreclosure, even though it was an investment lot, it's still a foreclosure. So this borrower had good income, that actually happened to be in the real estate business. We were able to use their tax returns to qualify them, and you can see we got them up to a 90% loan to value. So 10% down on a $600,000 loan amount, jumbo money, but only a little over 3 years out from their foreclosure on that lot. They sold their primary residence. Again, good income, good DTI, and they actually had quite a few liquid reserves and also IRAs. We use IRAs as reserves, and that always, we always say we give loans to borrowers with assets or access to assets. So someone with an IRA, someone with some family, a family member who can maybe gift them some funds. Those are the kind of borrowers, the kind of loans that we're able to get done. So again, jumbo loans, the nice thing, we do loans with borrowers that have relatively recent credit events up to $3 million loan amount. So I know the people in the high dollar markets, I'm sure you've had to pass on somebody who had something 4 or 5 years ago and they just can't qualify for prime jumbo financing. So,
yeah, you guys, jumbo is probably one of your real sweet spots, isn't it? Those are so tough to get in the prime world that you guys really do fill a void there, don't you?
Without a doubt, our average loan amount, with all of our programs, including the non-prime, which are typically some lower loan amounts, is in the mid 400,000s, and that's nationwide. So look at some pockets of markets, the California markets, and the average is a lot higher than that. So yeah, we do a lot of big loans. Here's another scenario. And this is a unique one because this is a self-employed borrower, and this isn't a credit issue. This is a borrower who's been self-employed for 8 years with no credit. However, they have tax returns that have significant write-offs. So I think there's a lot of you on the call today who have probably worked with a self-employed borrower who told you they make X, and they fully believe, or actually that is what they make. However, when you got the tax returns to back that up, it wasn't at X. It was X minus a lot. And so that's what this scenario was. This was a self-employed borrower, and because of their taxes, and everybody knows Fannie, Jumbo, those guidelines, what is it? It's 2 years of tax returns, and they're looking at the net number. But for this scenario, we were able to look at the borrower's personal bank statements, average their deposits. This one was 2 years, but we can actually go as few as 12 months. So 1 year of deposits on their personal bank statements. This one came up to $14,000. That was their average of deposits into their personal statement. So we used that as their income, and we gave this borrower a 90% loan, mid 400, 422 loan amount. So again, good credit, but not good tax returns to support the income that they needed to qualify for a house. And the nice thing about this is that these are fully ATR compliant. These meet the documented ability to repay that's been set forth by the CFPB. So it's alternative income documentation, but it's fully documented. And Frank, this is the fastest growing piece of our business. It's about 40% of what we do today. And I would guess most of the people on this call and a lot of your listeners have come across those scenarios of the borrower that, hey, this isn't a credit issue. This is simply a tax return issue.
There's an interesting question here, and it's from Peter, and he's curious about, they're a correspondent lender, so they've got, warehouse lines, right? They've got their own lines.
Mm-hmm.
But their lines won't lend on anything that's non-QM. So,
okay.
So if they wanted to work with you, they would be operating more in the capacity of a broker, right? You're the one who's going to be funding this loan. Well,
it's both. We have big lenders that actually have spoken to their warehouse lenders about doing business with Angel Oak, and the warehouse lenders are fine with that because we have a track record. And we Angel Oak companies, we've issued 5 securitizations with our production. The last 3 have been rated. In fact, one just went out last week. So we have there's a certain comfort level with lenders that do business with Angel Oak. So yes, they could either wholesale broker those to us where their warehouse lines weren't involved, or more than likely we can talk with them and talk to their warehouse lenders. We already have quite a few that are approved or were approved to do business with them. So great question.
Cool.
Either scenario works. So those are just a few scenarios. I didn't want to get into a lot of guidelines and a lot of specifics, but those are just the kind of loans that we're seeing these days. And then the next question that we get, probably more than anything, Frank, is where are these borrowers? Where do we find them? That's kind of the question. If we tell people, if you just sit and wait for a deal to fall out, you're probably not going to see. You'll see some deals, but you're not going to see as many. But I believe non-QM is the kind of product that you can actually use and go out and find the borrowers. You think post-crisis, realtors have kind of been that first line of defense, and if they've ever lost a transaction due to a credit event or due to tax returns or any kind of scenario like we've already talked about, they know to ask those questions up front, and they may not be aware that today there are other options. There are non-QM loans. So, this is why I think it's really important for loan originators that are on this call to kind of look at these. These are the places that these non-QM borrowers can be found. First and foremost, the realtors. What I just mentioned. Wouldn't you agree? I think, isn't your mother a realtor?
Yeah, she is.
Yeah, and so realtors don't like a deal to fall apart, and they remember what caused a loan to fall apart. So I think loan officers can go out today and do some re-education of realtors. And if somebody reaches out to me, we actually have that. I think you've seen even, Frank, is a presentation that they can take to realtor offices and get in front of them and show them ways to capture more deals.
Yeah, that kind of segues to a question that we have here, which is somebody's asking, are they going to get this PowerPoint at the end? And we're going to be able to send this to them, correct?
Absolutely. Yeah. I think we'll send out the recorded version of this, so you don't have to take notes, and we'll send the PowerPoint out as well.
Okay. And there's a couple more too before we move on to more ways to find these deals. So there's another question, which is, well, one person's asking, do you do refinances? And I've already typed back to them, sure, I'm sure they do. So, yeah,
we purchase, rate, and term, and cash out. We see a lot of debt consolidation and cash out loans.
And you do, correct me if I'm wrong, but what's your refi? What kind of refis can you do on investment properties? Because those are typically an unusual beast as well.
You mean the guidelines behind them, or can we do cash?
Can you do cash out?
Absolutely. Do a lot of cash outs. In fact, you think about it, during the crisis, there were a lot of people that couldn't get loans, but maybe some properties were affordable enough. There were a lot of cash transactions. And, cool. We in the mortgage business were very aware of that. We don't like, we saw a lot of cash transactions. So there's a lot of investors sitting on a lot of equity, and they'd like to put some leverage and take some equity out of these properties. And so yeah, we do cash outs on investments all the time.
Great. Another quick one here while we're here. Boy, they're starting to stack up, Tom. So let me just take one more, and then we'll get through this, and we'll get back to it.
Fire away, I love it.
Yeah, I want this question to go in just because it was when you were going through and explaining non-QM, et cetera, you were saying that you guys, your product's all under the ATR guidelines. And so someone's asking, this is Andre, and he's going, did you say this is considered verified income by the CFPB? I don't think he's stating that properly. You're verifying the ability to repay, right?
Ability to repay, which is documented income. So yeah, it's a documented ability to repay. So that's the guidelines that actually every loan has to fall under. Whether it's QM, non-QM, you have to have a documented ability to repay, but we're able to offer some alternative document options.
Okay, cool. And actually, there's a couple more questions here that I think we can address these now because they're asking more of the scenario questions, and we just came out of scenarios. So let's stay on the scenarios, then we'll dive into further where to find deals. So here is Sunny. Sunny is saying, hey, can you help people with job history issues? For example, a guy's had 7 jobs in 2 years. I mean, is that in your wheelhouse or no?
Again, it does go back to a documented ability to repay. So, I wouldn't say that that's where we're going to be real different than Fannie Mae. That someone's income, if it's not been consistent enough, and they need out of those 7 jobs, the one that paid them the most to qualify, that's going to be a tough deal for anybody to get done. But I would also say, we don't look at one factor and make a decision. We kind of look at a loan in its entirety. One thing that differentiates us greatly from Fannie Mae is a computer's not making the decision for us. We manually underwrite every single loan. So what I would encourage anyone to do, and I'm going to show you how here in a minute, is let us look at the deals. If we can look at 1003s and credit reports and 1008s, we can help capture deals all the time that you might think won't qualify, and in fact they might even be outside some of our guidelines. But since we are manually underwriting these, we're able to make exceptions when we think it's a good loan. We want to make good loans.
It's interesting because when you opened up, you were saying that we want to hear the story. We want to know what's going on. And when I got in the industry, that was January of 1987. Back in those days, the credit scores didn't even exist, and so every loan was what's the story? What's the story? And so we had to go in and say, this is what's going on. This is what happened. Nowadays, you just don't get that with agency at all. You're right. It's a computer. Yes, no. You know what I mean? But so it's pretty cool that Angel Oak Angel Oak operates under that premise. It's like, tell us the story. What do we got here? Fill us in, because the story can and will make a difference. Even the guy with the 7 jobs, maybe there's a story behind this. Maybe it makes total sense.
Absolutely.
You know what I mean? That he's got, maybe the nature of his work is such that this is the kind of guy that's going to have multiple jobs. So I would suggest just running it past these guys, running it past
Right.
Angel Oak guys. I mean, because they want to hear the story. Here's another, let's see.
And also, Frank, there's a term, compensating factors, that are a big part of our business. So, if they're light on one regard, but they've got a compensating factor somewhere else that makes the deal strong, then that's what we're all about. We're looking for those, the whole picture, so to speak.
Yeah. They're stacking up here. This is a real fast one. Just max LTV on an investment property. If all things
On
are
an investment, 80%.
Okay, 80. That's not bad. That's pretty
Yep.
normal. This is a good one, and I know the answer to this one, Tom.
Okay.
The answer to this one is, what's a good name other than non-QM to describe this type of loan? And I'm going to say non-agency.
There you go. Yeah.
Non-agency. Yeah. So.
Yeah, and we use non-QM because that's just a bucket that a lot of people just think of. You got the QM lenders and then the non-QM lenders, but non-agency is probably the better term, because we do some QM loans. So they're not agency loans, but they are QM loans, and so non-agency is a much better descriptor when you start talking about the kind of loans that we do.
Gotcha. Here's another scenario. Okay, here's another good one. And we've got time. We're only at 10:27, so we got a little time to knock these out. And I'm glad people are asking the questions, because that's what this is all about. What do you got? What do you got?
No doubt.
So now I got Paul. I don't quite get this question, but it might make sense. Might make sense to you.
Okay.
He says, will you calculate income from a client's large liquid asset pool? So maybe he's referring to interest earned on that, or I'm not sure.
Well, so we have, I think what it might be talking about is we do have an asset depletion loan where we take some assumed income that large assets are going to generate in the future. So yes, we do that. And also we have, what's even better is an asset qualifier. So we have someone who has a big chunk of change sitting over here. We can actually qualify them for the mortgage based solely on those assets. So there's some guidelines around it, but we actually do a pretty decent amount of those loans, because there are a lot of borrowers, maybe their income might be not something we can look at. We can't look at bank statements, but they've got $1 million sitting in an account, and it's a somewhat liquid, or it's their funds. We can a lot of times get them qualified for a mortgage. And again, we call that our asset qualifier.
So, Paul, I would say definitely let's get this one up in front of these guys, because it looks like they might be able to help you. And then we've got Julia, and she's just wondering, hey, what are the credit scores here that we're talking? And in those scenarios, you laid the credit scores out. But Julia, I would tell you, we're going to get through this section here of where we find these borrowers, and then after that, are we going to move to the website, Tom?
Yeah.
Okay, so Julia, stay tight with us. He's going to go to the website and show you how you can figure all this out on your own. Super fast, super easy. You can figure out LTVs, credit scores, all that kind of stuff that are going to work. It's really, 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 really great.
But you know what, Frank, I will answer the question, because I was thinking about these scenarios. They did have some higher credit scores, but we go down to a 500 credit score, and so we're not really. We think of credit score more of that's kind of an LTV and a rate guide, but it's not really a loan guide. Our average FICO is in the high 600s for all of our loans, including our non-prime, but we will go well below that, and we do often when it's a good loan. If it's a good borrower and a good loan, we will go down to a 500 credit score. But
awesome.
We're going to show them some tools where they can. Click for that.
And then I got another one. So it's only 10:30. Let's take this one. This is okay. So
all right.
this is L. Ford. I don't know if it's what the first name is here, but either Mr. or Mrs. Ford. I'm not sure. Laid out kind of a detailed scenario, and I'm going to say you're going to want to get this in front of Angel Oak no matter what. But the loan originator says, I have a borrower with a 670. The wife has a 700. Okay. Husband's making $97,000 a year, I assume, but has no bank account. Okay. He uses his wife's account. Okay, so he's funneling money into the wife's account. And hasn't filed taxes. Now, I don't know if that's ever or just recent taxes. I'm not sure. Okay. But has stubs from an enterprise-sized business. Wife makes $48,000. Is that something that you might be able to do? They're looking at like $400,000 or $500,000 loan. You should probably want to take a look at this, right, just to see.
So what that sounded like to me was the husband maybe is self-employed, but this money is going into the wife's account. And that scenario is fine. Husband and wife need to be on the loan. If they're both on the loan, they're married, we're looking at them, together anyway. And those scores are going to get them qualified. And jumbo loans, yes, if the cash flow going into the account, we also, one of the borrowers, one of the spouses can be W-2'd. And we can do a self-employed borrower and a W-2 spouse, and we look at the W-2 income and the self-employed income and combine them. So do that every single day. So yes,
I would say L Ford, you're going to want to get that in front of these guys and just see what they can do for you. Another quick question. Let's take two more and then we'll move on.
Okay.
When Julia said,
yeah, this is fun. I like this.
Yeah, it is fun. Yeah. So. The contract that Angel Oak has with these guys, specifically this Brian here is wondering, how about buybacks? We get approved with Angel Oak. Something goes wrong on a deal down the road. What am I looking at for buybacks?
Well, that's a very specific question, obviously, but when it comes to the performance of the loan, no one's on the hook but Angel Oak. We underwrite, we approve these, we issue the clear to close, whether it's a wholesale or a correspondent relationship, so no one's on the hook for a loan that doesn't perform. The good news, though, we've been doing this for almost 5 years, and we can count on fingers on one hand, how many delinquent loans we've had. So we're making good loans, but the question was, would they be on the hook for that? Absolutely not. We're on the hook if we make a bad credit decision.
Got it. Thanks. We'll take one more here. What about student loans that are on an income-based or that are on an income-based repayment plan with a zero payment?
Yeah, so we can't completely ignore deferred loans, so we do have to take a percentage of the outstanding balance. If they are on a payment plan, though, and we can see what the payment is, we'll use that or this minimum payment calculation that we have to use.
Here's another one. When you finance an investment property, will you finance the property based on the property's income rather than the borrower's income? How do you deal with the income on the property?
Wow, that's a great question. We have that exact product. We call it our investor cash flow, and it's just that. We're not looking at the borrower's income. We're looking at the borrower's credit and the borrower's assets. But from a qualification standpoint, we're looking at the cash flow of that investment property. So exactly what they asked, yes, that's exactly what we do. And we do purchase and rate and terms on those, and cash outs, excuse me.
There you go, Paul. So that was easy. All right, let's go ahead and go to, now, how do we find more of this business? So you already said Realtor Partners. Obviously, we want to go see the Realtor Partners. Let them know that you've got these unique products. Let them know that, what you might think is a dead deal, or if you had some deals die by some other lenders, maybe you want to get those files over to me so I can take a peek at them because I might be able to revive these deals. So Realtor Partners, absolutely. What else do you got?
Well, we kind of have the bullets on the screen there. Builders and developers, their builders their businesses are really good right now, but a builder never wants to lose a potential borrower who walks through one of their model homes or that they're working with. So go to these builders with some non-agency offerings, and builders are going to be really excited about it. We talked about bank statement loans. So who is the one that is causing these tax returns to not qualify? It's the CPAs. So I know these borrowers. They work with them every day, and they actually know who is probably looking for a house, who deserves to be a homeowner, but they're good at their job. So they write a lot off for those borrowers. Bankruptcy attorneys. That's kind of bankruptcy attorneys. They have a lot of clients that they might have filed, but they are a deserving homeowner now, and those are good people for you to get in touch with.
Yeah, absolutely. You know, like you said, if you can work with a bankruptcy attorney and say, you know, I don't know, somehow get in touch with people that filed 2 years ago or whatever the case may be that fits the guideline. You know, they might be a great candidate.
Yep.
All right, let's move on. Let's move on to the next segment. This is, are we going to the website now to see some things, or?
Yeah, let's go to the website. So one thing that I would just tell you, and can you see the website pretty good there?
Yeah.
Right. Okay.
Yep, you're good.
Our website, Angel Oak MS. So a lot of these questions that have been asked, you can get answers to them, you know, at your fingertips. So right now on your computer, if you go to Angel Oak MS, well, maybe after we're done, but I'll just show you some things that you can click around. And there's so many great resources here. But you know, Frank just mentioned, hey, send these deals to Angel Oak. Well, you do all that through our website, and it's a secure portal. But first, the most common tool that people use is right here. We call it our quick quote. But that's where these scenario questions, you can ask the computer, and within seconds you get an answer. So when you do that, when you click on it, it's going to ask for your company. So I'll just say ABC Mortgage. So you hit log in, and then it takes you to this screen. And these are just drop-down boxes, Frank. You have to answer these few questions. So first is credit score. So we'll start, and I'll just put a scenario in. I've got a 700 credit score. Loan amount, let's say this is a big loan, $750 to $1 million. Loan to value, 70%. We'll just say 70%. Housing history, they actually have had a good, clean housing history for the last couple of years. Maybe that, you know, if they've had a foreclosure in the last 12 or the last 24, then you would answer that. But once you answer this last question, let's say 0 times 30, then programs start popping up. We assume it's a 1 unit. We're assuming it's a purchase, but you can change it to cash out or rate and term. Owner occupied, and full doc, but I'll show you how you can click around. But once you've answered a few questions, it's going to show you right here what the loan options are. The first one that popped up, and again, this is where somebody asked earlier, what program was that on? This is where our programs are listed, but you don't really need to know those. You just need to know angeloakms.com. If you remember that, this quick quote will direct you to the right program. So guidelines, things like
yeah. What they were asking, Tom, was is the product a 30-year fixed, a 30-15?
Oh, okay. Oh, I got you. Okay, yeah, and so the majority of our loans are 5-year ARMs, but every one of them has a 30-year fixed option. So they're all 30-year AM loans. Most of them are 5-year ARMs, but again, we can do 30-year. Thanks for clarifying that.
And then prepayment penalties.
Any of our owner-occupied and second homes, no prepayment penalties. So those that have been in the business a while might remember the term kind of a Band-Aid loan. That's what these are. These are loans to bridge the gap to somebody till their seasoning from their credit event is long enough for them to, you know, we fully expect a couple of years down the road that these borrowers are going to refinance into an agency or government loan. So no prepayment penalties.
Gotcha.
Investment properties do have prepayment penalties on them. But so anyway, I answered a few questions, and here's the answers. Platinum, we asked for a 70, but it shows here we can get to 85 on this product, and it gives you what the rate is, 4 7/8. Portfolio Select, we asked for 70, but we can get to 90. And then non-prime, we asked for 70, we can get to 90. And here it has like some housing seasoning requirements, 48 months, 24, bankruptcy seasoning, reserves, just some high-level stuff. But what's nice about it is you can change this. Let's say, oh, this is full doc. What I meant was 12 months bank statements. And it immediately changes to the right products. And so, again, Platinum still applies, 70%, but we can get you to an 85. There's the rate. Then our bank statement program, 70, we can get to 90. And so you can click and make changes here. See, right, we've got the asset qualifier, somebody mentioned earlier, 24 months, business bank statements. So you can just click around and make changes to credit score, to anything you want, and it's going to show you what we can and can't do. So Quick Quote is really our most popular feature on our website. And from here, yeah, we're doing okay on time, aren't we, Frank? From here,
yeah, We're looking good, man. It's 10:40. Yeah, we're doing good.
Okay. Okay, great. From here, when you see the product, okay, we're a personal bank statement. You click, when you highlight right over the pre-qualification request, it goes highlighted. You click on that, and it just takes you to the next page. And you fill out a little bit of information about yourself. You start by picking your account executive, who's listed here. You pick your account executive, fill out some information, and then upload 1008, 1003 credit report. Make any comments you want to make that you want the account executive to know of, and click submit. And that goes directly to an AE. And they're going to have an answer for you in writing, what we can do for that borrower, what are the terms, anything that you need to know about the loan within 24 hours. So super simple.
Awesome. There's a couple of questions rolling in now.
Okay.
So here's obviously a realtor is asking, hey, can realtors use your website for a quick quote?
Sure. Yeah.
Sure.
You have to put in your company name, and if you're not signed up with this, that's fine. You can still use it, but yeah, yes, you can.
Okay. And then here, Fred is asking, I think he's talking about probably the points involved or whatever. I asked him to clarify it.
Okay.
He said, are they all borrower paid? So I'm not sure.
Yeah, that is, so we actually have lender paid or borrower paid on every transaction. We just rolled that out earlier this year, and so yes, we can have lender paid or borrower paid, either one, up to the customer.
Oh my gosh, they're stacking up again. Okay, so here's another one. David is asking, do you see most of the transactions having the loan officer / broker making the full 275 bips?
Well, we allow up to 300 basis points. I would say most do, but not all. It kind of just depends on what your comp plan model is and what your business model is. Certainly the higher the lender paid or the borrower paid points, the higher the cost to the consumer. But yes.
Cool. Here's a good one. What's the average time for a full package underwrite?
So our average time from start to finish, from the first time we see the loan to closing, is 21 days. So we work fast. And we get loans into closing, we close them quickly, and your AE can walk you through the steps that are required, but it's really easy, 21 days. If you have a good, fully processed package, we can close a lot quicker than that even. We close a lot of loans in 10 days, so we're getting loans today on the 14th of the month that we're going to close before the end of the month. So 21 days is our average.
Okay. And then he's following up with, is that business days or calendar days?
That would be calendar days. So
all right, calendar days. There you
calendar
go.
Days. Yeah.
Here's a good one. On the 5-year product, the 5-year ARM, right? What's the DTI qualifying rate? Are you qualifying at the start rate?
Yes, we qualify at the start rate. Typically our standard back-end DTI is 45, but we will case by case go up to 50% back-end ratio.
All right.
And the story. What's the story on that one?
Yeah, we've got them up to. I'm up to date on questions right now, so let's go on to the next part, which is let's talk about how do we get signed up with Angel Oak. How do we get some marketing materials to be able to go out and let people know we've got these products? And where do you land? That's what I want to know.
So we'll do one quick thing just for those on our website. If you're not approved with Angel Oak, right here you just click on broker package. You follow that link. It opens a PDF, and you print it and you get started. So I would encourage people to do that. I'd also like to show you how to find an AE. It's under this Contact Us, and this has a whole map of everywhere we're doing business today.
Okay, good.
Click on a state, and someone's going to pop up there. The regional sales manager for that market. You can send them a quick email, and we'll get you in touch with the right person.
Perfect.
All right, let me see. So then you asked, really about marketing, because I think I mentioned it earlier. I think that's really important, that you need to go out, you need to learn enough about these products, but we've got so many tools and resources to make you an expert in addition to our account executives. But this is one of my favorite things is when you're approved with us, you would click this little green bar right here in the center that says log in, and when you do that, you log in, you'll have a username and password to get into our site, but you would log in, and on that site, this is where all your loans, your pipeline of loans with us is going to be, but also across the top is marketing flyers. And you click on broker flyers, and every flyer that on every program and every product that we have is on here. So you can see how many there are, and you would click on it, and this is a customizable flyer. It says nothing about Angel Oak on here. So right here you would put your logo, then this is a bank statement flyer. Then down at the bottom you put your name, contact information, anything else, your NMLS number, but then you would save that and it's yours. It's yours to email, to print, however you want to distribute it, put it on social media. This is your flyer. This is not an Angel Oak flyer. So
that's so awesome. I like it too because you can print it and deliver it, hand deliver it, or you can email it, or you can post it or whatever. So you got all the options there.
All the options. It's a PDF that do with it as you wish.
Well, this is awesome, Tom. This has been great. There's just a couple more quick questions here, and this is working out timing-wise. I got to go because we've got another webinar backing up against this one. But
okay.
What's the appraisal process? Do they order via their normal AMC, or how do they work the appraisals?
We have approved AMCs, and if you're signed up with us, we'll tell you who they are. But they're nationwide, big appraisal management companies, and we've worked with them, and they all do a really good job. If you're a correspondent, you work with your own AMC that you always work with. So it does depend on which channel you're signed up with us.
Okay, two more quickies. It looks like Missouri is not on the approved state list.
Yes.
Any plans there?
It is in process.
It is in process.
It is in process. I don't have an ETA because a lot of that is out of our control.
Okay, well it is in process, so that's good news. And then our final question, and this is from Ted: is there a cost to join Angel Oak?
No, there's not a cost. We actually use Comergence to help us manage licensing and things like that, but we pick up the tab for Comergence, so there is no cost to get signed up with us.
What a great way to...
There's an opportunity cost if you don't, though. Missed loan.
That's right. It'll cost you lots of opportunity if you don't get approved.
That's right.
What a great way to end it. It was beautiful. So with that, we're going to go ahead and sign off, say goodbye to everybody. Tom, can't thank you enough. It was a great presentation.
Yeah. Great. Thank you, Frank.
I think a lot of people got a lot out of this. That's for sure. Guys,
really good questions.
Yeah, just as a reminder, we did record it. Hopefully it came out within the next 48 hours. You'll get an email with the PowerPoint Tom gave you, some links, some information, this recorded webinar, and so you can, jump out into the field immediately and start digging up some of this business. So with that, just looking at my list here, I think I got it all. If I didn't hit it all, I'm sure Ashley will tell me. But I know we got it all.
Yeah,
we did great. And that was a good webinar, and I thank everybody for showing up. Really appreciate it. We're getting thank yous on the questions saying thanks a lot. So that was really good. With that, we'll go ahead and sign off. Tom, I'll catch up with you later. And for everybody else, have a great holiday.
Thank you, Frank.
And,
all right.
We will see you again. Frank and Tom, we'll see you again soon on another.
All right. Good deal.
Webinar. All right. We'll see you guys later.
All right. See you.